Hi, Hamish Conway here, and welcome to TACOS Tuesday. This is episode number 40, and TACOS Tuesday, this is the place for the best Amazon ads, tactics, and strategies to help you grow your sales on the Amazon platform. And today, again, is Sebastian Hargraves, Sell Global's head of advertising. How are you, Seb?
Doing well. Yep. Thanks for having me on the podcast, and another one that's a bit timely with Prime around the corner.
Yeah, 100%. So last week we were talking about some vendor-related strategies there, and particularly in Australia, but there's a bit of a pivot here as many brands who are selling in America, and this will also happen for those in Australia as well, and it's probably more suited here to third-party sellers where we can get additional data around lifetime value. But as people are starting to look at what deals should they submit, there is an advertising picture that you need to consider at the same time. And so what we're going to cover off today, because this is a two-part discussion really, and the other part will happen in a couple of weeks, but it is doing some analysis on the previous year's Prime Day. So if you advertised you had Prime deals last year and you're advertising on those, you can dig into the data to find out, was that a good idea? And should you double down on that, or what kind of deals should you be putting forward? So we've got a spreadsheet on this one here. So if you're just listening, we will do our best to describe these numbers, etc., that is happening. But if you really want to have a closer look, then come back to the website, gosellglobal.com, look at podcasts, and we'll have the YouTube video there for you to see the numbers that we're looking at. So that won't take you long because it'll just be one snapshot as we describe it. But you don't have to do that. This will all make sense anyway. To get the thinking is what we're really after here, that you want to be bringing to this. And we've just got an example here to help that understanding. So Seb, shall I bring up the numbers now, or anything to add before we do that?
Yeah, I think there's one thing to add before we do that. So the way that we think about Prime is, and whether it's worth it for you or not, is really to think about it in the lens of what your business is and what your business sells. So, in today's example, we're going to be talking about a business that sells a consumable, and so it's a product that, people will repeat purchase. Your brand or your products might not be like that. And so your strategy will be different to the one that we're sharing today. And we'll talk about that as well. But just before we get into it, just know that there will be two different kind of strategies depending on what kind of business you have.
Yeah, 100%. Yeah, really important point. Makes a big difference depending on that repeat purchase aspect. Okay, all right. So let me share, and then we can start to talk to me about this analysis.
Cool. So yeah, let's step through what we're looking at. There's a few numbers on the screen. So what we're trying to answer is really the question is it worth it for us to invest in Prime, and how much should we invest in Prime? And so what we did is we went back and had a look at our previous numbers, and that's the best way to approach anytime you're trying to answer these kind of questions is go back and look what has historically happened for you on Prime, if you have access to that data. So in this example, what we're doing is we're kind of doing what we call a cohort analysis. So we're basically comparing, a whole bunch of customers that came in a certain period. So in this instance, it's July 16th and 17th, which is a 2-day period from 2024. And we're saying, okay, how much money did we spend on ad spend during that period? How many customers did we bring in? How many orders did we bring in? What was our lifetime value on those customers? So in the spreadsheet we've got here, we've got a $68 lifetime value on our Prime for last year. And it's important to note that the total data that we're looking at is a 264-day period. So those customers bought on July 16th and 17th, and then they went on to continue to purchase from us in the data that we're looking at here, all the way up to the February 28th, the 264-day period there.
Yep.
So is that clear, Hamish?
Yes.
That part?
Yeah. No. That is clear. So 68.90 was just for the customers who initial purchase in that period, and then the subsequent purchases they had, and that led to that lifetime value. So that makes sense.
Yep. So that's that. And so to kind of give you an idea, this product in general, probably more at a $25 price point, like as in for that first purchase, or close to that averagely. There's a bunch of averages in here, but so that $68 is pretty significant in regards to what we normally get from that first purchase. So the next piece to this is working out how much it cost us to acquire each of those customers. So the next one we have here is what we call your blended CAC, or your cost of acquisition. This metric's used everywhere. It's used in Facebook ads, Google ads, etc. And so basically, this is just how much did it cost us to acquire each customer, and we calculating it with promos plus your ad spend divided by the amount of customers over that period of time. So in this example, that's $10.48. So customer lifetime value is $68. The cost of acquisition is $10. I mean, most of the time, the math's is gonna make sense when you're looking at it like that.
Yeah. And so this here accounts for promos, right? And so this is the deals that you are submitting in that period there, which will, often looks like a discount. Well, it does look like a discount. So even though you've got that, there's something that we actually didn't discuss before. I was just thinking of it now. Like if there is, because some of these deals have to be 20% to make it work, to get to be submitted as deals. So this blended CAC takes into account that plus the ad spend as well, which is effectively a $2. If you've got 1,000 customers and you spent $2,758, that there's a bit over $2 of that there is towards the cost of advertising.
Yep.
And the rest of it is the promo. Okay, that makes sense.
Yep, that's right.
Okay.
Yep. So then the last part is, what do we want it to be? And so in this example, we set up what we call a target CAC and a target profit margin. Now, you need to have some numbers in order to calculate this. You'll have to have your contribution margin. So that's your margin before advertising. So you want to have your cost of goods in there, any fees that Amazon charge you, fulfillment fees, all that sort of stuff included in that. From there, you should be able to work out and the calculation is your customer lifetime value times your contribution margin times your profit margin will give you your target cost of acquisition. And so in this example, we've got $16.50 if we wanted to hit a target profit margin of 20%. So
you've got gas in the tank, is what you're saying.
Yeah, you've got $6 basically. I mean, roughly $6 between what our CAC was last year, and what we could have went to if we and still retaining a 20% profit margin.
Right.
In this example. So so that's really good, really healthy.
Okay.
Example. Now, not everyone's scenario looks like that, but that's a really healthy one.
Yeah. So there's the initial purchase, the profitability was low, but then the subsequent purchases are where the profitability comes, and this is the whole game. And we've done a full episode on that. Okay, so we're looking at that. That was the peak deal period there, and then the next cohort is looking straight after that, where there was no deal. And a comparison there. So talk to me about what you noticed there then. Yeah,
so exact same numbers, but just looking straight after Prime. And you can go, if you wanted to, you could go outside of like maybe a week after Prime if you're worried about the numbers, kind of dropping off significantly. But when I looked at it, it was fairly comparable. So I didn't go any further than that. But we're looking at July 18th, 19th, which is the 2 days after. So we are comparing an apples for apples, 2 days versus another 2 days period. And the first thing you'll notice is just the lack of customers and the lack of orders in that cohort. So you're looking at 1,100 customers during Prime and 183 customers in the non-Prime period.
It's nearly like six times more during Prime Day based on those deals. So that was the uplift.
Yeah, absolutely. Yeah. Orders 191. The customer lifetime value. So this is an interesting part, and it's why you shouldn't just focus on customer lifetime value.
Yeah.
But the customer lifetime value was actually more in the in the 2 days after the event, and really what that's telling me. And you can give me your insights as well, Hamish. But it's that people that buy through Prime, there's probably and this could just be because of the sheer number of them. There's just a higher proportion of those that are dropping off along the journey compared to the ones that are outside of that window.
And there's also potentially, and during the during the Prime window, there people are more deal seeking, and there were deals. there versus outside of that, it's people paying that normal full price. So it could be something along those lines as well, or maybe a better quality customer. Okay, but then so as we look at that, the actual blended CAC are a lot lower. Obviously, there's no deal promo deal in there, so it's less than half, $6 less. So that makes a difference. Outside of that period, probably no surprise given that promo. Anything on that there that you would?
Yeah, I mean, no, just what you've said. So you could say, should I just increase my ad spend in the non-prime promotion period and use that as my lever to grow my customer lifetime value? But what you'll find that your CAC will end up being worse by just trying to use that. Like if you were to dump the same amount of ad spend that we did during the prime into those 2 days that are off prime, your CAC actually would end up being not as good. It'll be worse than what it was through the prime period, because you get a diminishing return when you really try and push something that doesn't have strong conversion rates for it. So so that's what I'd say about the kind of that piece there. We're kind of using promos more than we're using ads, because in that deal period, people are really looking for that promotion. And if it didn't have that and we just put ads behind it, the CAC would be awful. Not because of how much we spend on ad spend, but just because of the uptake. There would be zero uptake, the conversion or very little uptake.
Conversion would be low. Yeah. Or just not even getting the initial click. So I think
that's right.
So the key part here in summary is, I mean, one is to do the analysis, because then you know. And particularly if you have products that are consumable or ongoing repeat purchase, or a brand that has a lot of attachment sales that would make sense, then this is really interesting. And if you are prepared to invest in deals and put ad spend behind those deals, then this can give you a big payoff through the balance of the all the subsequent months or years following. So when you do the analysis, you know what you can spend. Not that not encouraging to spend everything, but in this case here, there is room to move. So there is an argument to go, we should put more ad spend behind this to get more customers and that lifetime value, where we are making in this case here, that 20% profit. And again, it just shows the impact of deals, not on every brand, but this is not uncommon, right? To see a 6x increase through a deal window. Sometimes we see it higher, but 6x is a pretty reasonable number to expect when you've got a deal in place. So, what else would you say, Seb, to wrap up on this analysis here?
Yeah, I think the key part for us today was trying to have people think, like a lot of brands don't think about Prime this way. And the way to think about Prime is not how much money I can make. It's how can I impact my business over the long term using Prime. So, you do need to have parameters in place. And in this example, if we'd set it at a target profit margin 20%, but you could be like, I'm willing to make no money or no margin purely because I'm trying to drive the growth of the business. And obviously it depends on what stage that the business is in. If it's in that kind of, you're really trying to grow the business, then that would be appropriate. You're like, I don't want to lose money, but I'm willing to get to break even, to acquire those customers. Because then what you'll see in the subsequent months, and this is the next important part, is you've done the homework, you've looked at your Prime previously, you know that you're in you're wanting to acquire customers, so you're willing to run at that break even. So aggressive, ads, aggressive promos. The next thing to measure will be the impact from that. And so what you should see from every month after Prime, you should see that your revenue maintains or continues to grow with those subscribers that continue to stick around with you. And actually, your advertising cost will continue to go lower in comparison to your revenue, because you've done the heavy lift in that month, and then now you should see the payoff of those customers over a period of time. And like in this example, it'll last a year or longer. Like some of these customers hang around for, and probably one thing we should have done in this, Hamish, is put in like what's the average time that the customers are around for. Like how long do they hang around for over the long term? But those customers stay with you for a long time, and they reduce your costs not in that month, but for the next 24 months or 48 months after that.
And there's also the other benefit as well, Seb, of increased ranking, bestseller ranking through this here. Like this gives, definitely gives a boost, and that boost can stick around. Particularly if it breaks you into on certain search terms, you get onto page one or higher up on page one, so then you get even more visibility, and that's not uncommon to see a step change following a deal event as well, which is what you really hope for, and it will vary depending on the search term. But that there can also then just give you that ongoing boost of organic sales. So anyway, so I think the key story here is, like, if you know the numbers, if you can do that analysis, that is useful. If you'd like to have Seb run this analysis for you as you are planning your prime deals, then do reach out on go to gosellglobal.com. Look at services management for Amazon ads and book a call, and you'll see Seb's calendar there to do that. So if you're serious about really understanding what you can do through Prime, this will be a great start to do it now, so you are prepared with those deals in play. And then in another episode prior to Prime Day, with enough time there, we'll talk through what the strategies are there to maximize that window. All right, Seb, thank you for running through that, and look forward to episode number 41 next week. We're getting there. 52 will be one full year into it, so we're getting there. And so thanks everyone for tuning in and listening. Do appreciate it, and we look forward to seeing you on the next episode. Thanks very much. All the best. Bye for now.
Cheers.